Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 33rd report of this year, and as usual we're going to start off with the changes in commercials positions. As you may see, we've got the Dow Jones on top of a list with a 36% change in commercials positions, 34 in large speculators. These changes are huge, one of the largest changes in the past 52 weeks range, but it's coming a little bit late, as you may see, and you should be cautious with any sudden interpretation of the signal. This signal may be a little bit late for us right now. Jumping to the 5-year charts, let's have a look at this all-time COT Extreme. That is the case both in commercials and large speculators. Huge extreme, bearish of course, and it's suggesting prices should go down. Of course, you have to be careful with indexes. And of course, all-time COT Extreme situations, they can be present in the market for many weeks or months before any reaction from the price comes. So be careful, but nevertheless, it is signaling us a huge stress in the market, stress levels that we've never seen in the past. Our next market is the S&P 500, another index where we have a 20% change in commercials positions. You may see that change over here. Again, we're talking about a large change, but you may see similar changes in the past over here. The 5-year chart, it is not as extreme as it was in case of Dow Jones, which is of course a very good warning for us. If you're trading Dow Jones, just because you have an all-time COT Extreme over there, you should look at other correlating markets such as the S&P 500. So Russell 2000, another index where we have a 18% change, interestingly a bullish COT change over there. Signal, you may see that over here. Again, we're talking about a larger than average signal, and you may see that we had a bit of a decline over the past few weeks. So this signal may actually be coming at a right point in time, and I'd rather act on this signal than the one in the S&P or the Dow. Jumping to the 5-year chart, you can see that here the extreme is also very much different than it was in, especially in Dow Jones, where we had an all-time bearish COT Extreme. Here we have a 473 report extreme, both in large speculators and commercials, and this is definitely a bullish COT Extreme situation. So that's pretty interesting to have. Let's jump over to large speculator COT Extreme, and of course we talked about the Dow, we talked about the Russell 2000 and the S&P 400, and as you may see, the next market that would come up would be the copper market with 23 report extreme. So not a huge extreme. You know what, let's jump over to small speculator COT Extreme and see whether there's any. Okay, here we have the NASDAQ, the natural gas, and the New Zealand dollar. Let's talk about these markets then. So we're opening these charts because there's a huge extreme in the small speculators positions, 295 report extreme over there. And of course, this is when of course small speculators are so pessimistic about the market, that's usually a good sign for further rally. So that's a good warning. Again, we started off with the Dow, we had that all-time bearish COT Extreme. Everybody might have said, whoa, okay, maybe it's the time to go short, but here we have the Russell 2000 with a bullish extreme, and now the NASDAQ with a bullish extreme from the small speculators side. So that's pretty interesting. Let's jump over to natural gas, where we have 194 report extreme in small speculators, and the 5-year chart. Here we go. So here's that, and you may see what happened to the market when we had such a significant bearish extreme. You may see that these usually coincided with a bottom in the price. Another good example back over here from 2013. Okay, so again, we're talking about a possible bottom in the market, judging from the positions of small speculators. 194 report extreme, pretty large. And last but not least, let's have a look at the New Zealand dollar, where we have 177 report extreme in small speculators. and you may see that over there. In this case, we're talking about more of a bearish extreme signal. You may see prices have already gone a bit down in the past 3 weeks. And of course, we're not surprised that we were analyzing mainly the commercials and large speculators positions, and you can see that there was a significant extreme over there, and I was talking about that for many weeks. And as you can see, there has been a decent decline. How long that can continue, of course, that's hard to tell, but you may see that as prices started going down, that changed dynamically the positioning of traders. Until we reach a opposite extreme, I don't think that it's a bad idea to stay in that position if you took it. So that is going to be all for this review. Don't forget, you can look at other COT charts for free on our COT charts page. A more in-depth and detailed COT analysis can be done over here. You can look at other COT report types. You can look at other data types. You can do a historical analysis on an older report. Of course, you can look at all markets, and you can add other good functions to the table, which might help your analysis better. So I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.